strategy MSTR is down 74% from its all-time high. Their main flagship product, STRC, also called Stretch, is in major distress. It went down from its par value at $100 all the way to $82. Now it sits around $88 and seems to have a lot of problems reaching back to par. All of those facts will make it sound very crazy what I'm about to say. I think that MSTR has a very fair chance of being the biggest company on planet Earth. Currently, Strategy is sitting at around a $40 billion market capitalization. The biggest company on planet Earth right now is 125 times bigger than Strategy, with $5.1 trillion in market cap. Because if you believe in Bitcoin and you believe that this is the most valuable asset on planet Earth, wouldn't it be logical that the company with the most Bitcoin at least has a shot at being the biggest company on planet Earth, especially given the amazing track record of the ability of Strategy raising money to buy more Bitcoin. Remember, this was once a $500 million company, and now it's already a $40 billion company. And I believe MSTR can be a $1 trillion company. And this is what I'm going to talk about with one of the experts, one of the insiders in the Bitcoin Treasury space, Boyd Cohen. I absolutely loved talking with him about the future of Strategy, about the future of Bitcoin Treasury companies, and why he is so bullish on Bitcoin and on Bitcoin Treasury companies. Enjoy. Let's talk about Bitcoin Treasury companies, because with Bitcoin falling, Treasury companies tend to fall even harder than Bitcoin. What's your current read on where Strategy, Strive, and all the Bitcoin Treasury companies are standing and what that means?
I think we went through a hype cycle around treasury companies, maybe 18 months or so ago, where everyone and their brother wanted to start a treasury company because they were hot. And, they were hot in part because Bitcoin was also hot and running. And, the early treasury companies, Metaplanet and Strategy in particular, and then some of the emerging ones that were gaining traction like Smarter Web were really exploding. They've come back to earth. They're maturing as well. I think, in each market, they're kind of iterating and evaluating where the sweet spot is, regardless of where Bitcoin is on its price journey with fiat. My long-term thesis hasn't changed at all about Bitcoin treasury companies. I have the same conviction I had before. And I know, even you yourself were sort of anti, or at least not very interested in treasury companies for a very long time. And it's been very recent for you that you kind of got on board. Last year in my book, one of the chapters was just on treasury companies, and my thesis I espoused then, that I still hold today, is that a major amount of economies that have a money printer are going to be subject to a speculative attack on their fiat via treasury company, and it'll work. When you have a money printer that can just, debase the currency indefinitely, you have an arbitrage opportunity. And that's what all these treasury companies are doing. And I think, Saylor and Strive in particular have really landed on what looks to be a very winning formula. If you define winning as stacking Bitcoin as much as you can, they found the model to stack as much Bitcoin in a way that's accretive to shareholders. So your Bitcoin per share price indicator goes up. In the end, that's really what they're for me, BPS, Bitcoin per share, is the ultimate goal of treasury companies. How much Bitcoin can you have on your balance sheet for every share of stock you've issued? And as long as you can keep growing that, if your underlying conviction and thesis about Bitcoin remains, which, there's some people that are losing that conviction, but if you have that conviction on Bitcoin long term, then I don't see a future where every company in every country with a money printer that has the most Bitcoin in that country will be the most valuable company in that country. So that's the thesis I explained in my book, and I still share today. At least the top 50, 80 capital markets in the world with their own money printer, they will have a speculative attack on fiat. They will have a treasury company that succeeds at scale, and the one that has the most Bitcoin per share and the most aggregate Bitcoin is going to win. They will eventually become Bitcoin banks. They will have all kinds of other revenue streams. They're holding the most scarce asset in the world. I mean, people seem to forget when the price is down like this. There's going to be 21 million Bitcoin ever in the world. There's 20 million already in circulation. 4 or 5 million is lost, supposedly. Increasingly, they're going from paper hands to diamond hands. They're going from OGs to institutions. Not a great thing for the decentralization of Bitcoin in terms of the holder supply. And a lot of us that have some cypherpunk ethos, I may not be the poster child for a Bitcoin cypherpunk, but I have some of those values. You know, is it great that we're seeing the Bitcoin change hands from individuals to institutions? I don't know. I would rather it be held by more people than by institutions and companies. But you know, if Bitcoin was going to monetize, which has been the vision forever, that eventually would become the world's money, not just a store of value, then this was inevitable that institutions would get on board, and it's just part of the journey Bitcoin's on. So if you have that conviction that Bitcoin is eventually, gonna surpass anything the fiat world has ever seen in terms of purchasing power and everything else in a deflationary world with AI, then there is no alternative view to accept other than that companies stacking Bitcoin now, while Bitcoin is fairly affordable in the scope of things, are positioning to be the world's most valuable companies. And I am 100% convinced at some point in my lifetime, Strategy will be the world's most valuable company. It may take a while, but it's coming. So again, your zooming out question for retail Bitcoin holders is also applicable to treasury companies. People want to know, like, rest in peace, like, call the treasury space dead. It's not dead. It's not hyped anymore, but there are people building smartly in the treasury space that are stacking Bitcoin for their companies. And those companies are going to be wildly successful. It's just going to take more time than some of us thought.
I just looked up what the strategy share price was last time when it went up on the upside as it is right now. And it was around September 2024, which was the same share price that strategy had then right now. The only difference, now they're holding what, 850,000, roughly around that number, Bitcoin. Back then they held 250,000 Bitcoin.
There you go.
So like more than 3x, almost 4x that number, which is crazy to think about how much more value you're now getting. And back then, when it hit that 140, 150 US dollar mark, it went on a streak up to, what was it? Up to like 400 per share, which is crazy to think about. With not even a little, like not even close to how many Bitcoin they hold now. Now the MNAV and that was very expanded, was probably like a bubbly area, or was like a little bit too overrated, a little bit too hot at that moment. But man, like it, for me, strategy looks like a deep value buy currently because it just went down the last year 62%. And yeah, like even zooming out from the all-time high, what was that? Yeah, for 430 down, like almost 70% down from the all-time high that it hit. Like it's almost like hard to ignore at that point, and that's why I'm also like I had to get educated on it. I had to see it, and it was Chase Palmery that told me like, oh, it could be the biggest company in the world because it has the most Bitcoin in the world, and I'm like, that actually makes sense. And that kind of explained my journey down the
No,
strategy.
for sure. So I mean, I agree with Chase, and it's the same thesis I have. you stacking Bitcoin, as an individual, as a company, as a government, you're going to be in a better position. And, we're starting to see the arms race in Bitcoin at the nation state level too. And I think eventually it's going to be seen as, the world's superior, money and reserve asset, and we're getting there gradually. And maybe it'll be gradually, then suddenly. I don't know. I mean, that's kind of the view I've had, that it was going to be like that, and there's going to be some shocks, and then suddenly out of nowhere, it's like, whoa, where did Bitcoin come from? But maybe it's gonna be this, the last couple years have felt more like it's grinding up, grinding down, grinding sideways, chop solidating, whatever you want to call it. So I don't know what's going to happen long term, other than I know that fiat is going to die, is as it always does, and Bitcoin will not just survive, it's going to thrive. And I know in an AI world, it's going to do even better. And thus, any companies building on Bitcoin, stacking Bitcoin, creating financial engineering ways to acquire more Bitcoin, however they can do that. They won't all be like the classical Treasury strategy. They'll use different models. We've been having a debate in this sort of Bitcoin Treasury community forum we're in, where there's some diehards who follow particularly strategy really closely. Some of them are also getting pretty enthusiastic about Strive, and I've been enthusiastic about them forever, in part because their team is world class, starting with Matt Cole. But they got Ben Workman and Jeff Walton. They've got some great people on their team that are extremely sharp and doing all the right things. And you can see that they've now got the Bitcoin printer going faster than strategy at the moment. Like over the last couple of weeks, they've been able to stack more Bitcoin than or at least proportionally way more Bitcoin than strategy is at the moment. But they're following very similar strategy. But the debate I was going to mention, which I think is really interesting, is like a couple things. One is, what is digital credit? So Saylor's been talking a lot about digital credit, and there's a narrow view of digital credit, and there's an emerging broader view of digital credit. Like, is it everything in the tent, or is it just one thing? So some people in that community want to say digital credit is only one thing. It's a preferred share with no principal payback, that tries to get to par, and you can alter the interest rate a little bit. You try to get it to 100, and when it gets over 100, you're issuing more of this preferred share, which is then used to stack Bitcoin. My argument is, if Bitcoin is digital gold, which is what Saylor calls it, and a lot of other people do too, then any credit that's built on Bitcoin is also digital credit. So it's not just one type of preferred instrument. And the reason I bring that up is because in my Bitcoin company, Arcadia Bitcoin, we actually have two loan products that are, in our opinion, forms of digital credit. And they're being used for retail or high net worth investors, but they're also used by us as a company as well to stack more Bitcoin. There are different kinds of instruments, but they have similar outcomes. And the other thing that's similar to this argument that I want to bring up is like, it's timely. We're talking about this now. I don't know when the pod will come out, but, the week of around June 1st, well, let's say that Strategy made a sale of 32 Bitcoin, and that created a whole lot of chaos in the market, with people panicking that, well, Saylor always said you never sell your Bitcoin, you sell your kidneys, you do whatever, but you don't sell your Bitcoin. And I think all of us who are diehard Bitcoiners kind of feel the same way, which is why a lot of people use Bitcoin backed loans to like fund their fiat needs. If they're sort of fiat poor, I live fiat poor. I try to stack as much Bitcoin as I can. So sometimes I need to take out loans. So I take out loans against my Bitcoin. So that's like a common thing a lot of people do. But my point being, when you think about what the digital credit strategy is and the Treasury strategy in general, it's about stacking as much Bitcoin as you can, as we've talked about. Well, that can involve using a lot of different levers at different times in a company's journey or an individual's journey. And there could be scenarios where it even makes sense to sell some Bitcoin. What is the current value of Stretch? 11.5%. Why does that model work? If you go back to zooming out as you were, 4 years is an important cycle in the Bitcoin world. That's the halving cycle. It's been historically tied to price evolution in Bitcoin as well. Bull and bear markets, although there's a lot of dispute whether that's sort of a continuous cycle we'll see in the future, or if it's already been broken. But the point being, over a 4-year cycle, as you showed with the graphic, Bitcoin price goes up. So the idea is, if Saylor is roughly right that the CAGR, the annual growth rate of Bitcoin, is going to be around 30% through 2045. Okay, so if Bitcoin is going to go up around 30% a year with annual fluctuations, but over a long enough time horizon, it will average 30% per year. And you're paying interest at 10 to 12% on something to stack more Bitcoin, it's in your best interest, even if at some times in that journey, you have to sell down some of your Bitcoin to pay off the debt you've accrued to acquire the Bitcoin. That's just a type of carry trade. Some people would call it something different, but for me, it's a carry trade. It's like people going to Japan to take out like near zero interest loans to then go buy something else that's going to appreciate in value way more. And they're willing to absorb the interest payments from Japan to actually stack something that's going to grow faster than the interest they're going to pay. So where I'm going with this around the Saylor strategy is that there's been a lot of disputes and there's the Peter Schiffs of the world, but a lot of other people that are questioning, even in the Bitcoin community, like some people I respect, like at OnRamp. I don't know if you've heard those guys. They have very strong anti-Bitcoin Treasury views. They're Bitcoin maxis, they're dieharders. I share a lot of the values and views they have, but I don't agree with a lot of their views on the Treasury play. But a lot of people in and outside of Bitcoin think that it's some kind of Ponzi scheme. It makes no sense. How can they ever plan to pay back the dividends if they don't have revenue against the dividends? But it comes down to, what's your conviction on long-term price appreciation of Bitcoin? And if the long-term price appreciation is projected to be significantly higher than the interest rates they're absorbing on their preferreds, then even selling down some of their Bitcoin along the way could still be smart. They're still stacking more Bitcoin than they're selling. And I think, part of the issue is that Saylor has been so vocal: sell your kidney, sell your home, but never sell your Bitcoin. And now he's selling his Bitcoin. There's other reasons they're doing it. Like, it's going to help them with inclusion in the S&P 500, which is going to be great for them to create passive buying of strategy stocks. So there's reasons they're doing it that make sense. But even if they just plan that some of the dividend payments will come from selling some of their Bitcoin, it's still smart if you buy this medium long-term growth.
It's crazy, yeah. And we see it like right after he said it, like the Bitcoin market is tanking. Even though he said it already before that he might do that. He already did it before 2022. It's not the first time he sold Bitcoin. But yeah, his viral moments with sell your kidney if you must, but keep your Bitcoin might have have something to do with that. I don't know. And maybe there's also other market forces. I think like people think that he's a forced seller and think that's a bad thing.
Yeah.
Because they don't have the long-term view of, hey, he's raising 40,000 Bitcoin in that 1 week and has to sell like 50 Bitcoin in the other week to cover the dividend payment. Even though I think the 32 Bitcoin that he sold in that week, it's literally just to test the market. I personally think that he did it just to test the market, because
100%.
did he really need it that like 2 million?
No, he did not.
It's like pocket change for strategy. So I think he literally just tested the market and see what came out of it.
It was testing the market. it was telling the market, I am going to do this sometimes. I've told you, now I'm showing you I'm going to do it. It was proving to the S&P 500 that he's willing to sell the Bitcoin, because in the last review of the company's potential inclusion in S&P 500, they literally spelled out that one of the reasons that strategy wasn't included was because they have all this Bitcoin, which they're not prepared to value in S&P 500. They weren't, as face value of the asset. And on top of it, that this company, even though we don't really value the Bitcoin on the balance sheet, the fact that it has a value in the market and they're never selling it, that is a concern for us, because then how are they going to meet the dividend payments if there's a bad capital market situation? So they're doing it for that as well. And he's also, the other reason he's doing it, we haven't mentioned yet, is he's selling off some Bitcoin they bought at very high prices, and it's a tax loss or a tax benefit for them. So there's good reasons to do it, even though it panicked the market. And it's not great unless you're in a position where you have excess cash right now and you can stack more Bitcoin under 70,000 again, which it just dropped today. So yeah, it's a market that's still trying to understand what the Treasury strategy is and how it makes sense. And I think it makes sense to anyone who truly understands Bitcoin, even though some diehard Bitcoiners hate it. So I get why they hate it, to be honest, but I think they're mistaken in a lot of ways. I get the cypherpunk values. I get the idea of wanting it to be decentralized and held by billions of people in the world, not stacked by one company. But this was going to happen one way or the other. Companies, governments, institutions, as they start to understand the power of Bitcoin and what's happening with fiat. And, Saylor got there before anyone else did. And, good for him and good for everyone who believes in him and has believed in him. I think they're going to be paid off handsomely if they have the low time preference and they don't sell now when the stock is down.
No matter if you already have self-custody or still have your Bitcoin on exchange, your generational wealth that you have in Bitcoin could be completely at risk. And that's why I highly recommend to you to give the Bitcoin Way a 30-minute free consultation call to check how secure your custody setup really is and what you can still improve. So head over to thebitcoinway.com/Robin. Again, that's the bitcoinway.com/Robin and get your free initial 30-minute call with the Bitcoin Way. You see the equity world going up like crazy and you feel like, oh, why is it happening? And I think it's a lot about AI. Like a lot of people, the whole equity space is now driven by those AI players, and a lot of people want to invest in that and put a lot of money in there. And it's interesting how human conditions work, because now a lot of intentions is on that AI trade, which hits all-time highs, which is a horrible time to invest. All time, if something hits an all-time high, is usually not the best time to get into it. Usually the best time to get into something good is if it just like falls like crazy. And we have seen, I mean, Bitcoin is down, what, 40-50%. Strategy is probably down, I don't even know, 80%, 70%. I have no clue how much strategy is down from the all-time high, but definitely more than 50. And so like all the treasury companies are down, some more, some less. What do you think about the current Bitcoin market and the craziness that we are currently in?
You allude to something that's unfortunate part of the human condition, which we've seen over and over in markets. When things go up, people get euphoric and excited, and retail jumps in. And when things are going bad price wise, they lose interest. They drop out, and we haven't really seen retail around Bitcoin trade for a, a couple years, from what I can see, outside of ETFs, and you could also say the Treasury stock, especially strategy, is, attracted a lot of retail investors too. But it's I, I'm a I'm not a perma bull like a lot of the sort of well-known people that do a lot of podcasts. I'm not quite a perma bull, but I am, as a by human nature, and I think a lot of Bitcoiners are. We tend to be more optimistic. We see Bitcoin as part of the future, part of the solution to a lot of the world's problems, and we understand why Bitcoin has to win, and we know it's inevitable. And I think we have this natural instinct to believe it's just around the corner that the world's going to pick this up and start adopting in mass like we are and become Bitcoin maxis like we are. And all these kinds of massive transformational changes take time. And I think even more when you look at the underlying complexity of trying to understand what Bitcoin is, how it changes the world, which was the purpose of my book, Bitcoin Singularity, was published last year. I think, some people in Bitcoin like to say, it's easy it's not that hard. And hey, you get it at the price you deserve. So if you haven't bought in yet, that's your fault. I think a lot of those people miss how complex it is to really get your mind around Bitcoin. And I think even in our first pod, we talked to maybe a year ago or something like that. I alluded to this fact that, I've been a professor in business schools for a lot of my career and an entrepreneur for a lot of my career. And my colleagues in business schools don't know anything about Bitcoin. They don't get it. In fact, some of my colleagues don't even really understand what fiat is or debasement. And they've been professors in business schools for decades in some cases. So it's a hard thing for people to grok. And I think, there's only a small amount of people that really get it so far. And so the rest of the retail that had gotten into Bitcoin were in it for number go up. When number goes down the way it has for the last year or so, yeah, they don't have the conviction that we have, and so they're just looking for the next trade. And it's not their fault. When you think about it, first of all, it's a complex thing to understand and get conviction around, and second of all, the economy is not working for most people. So if it's not working for most people are trying to find a way to escape the matrix or whatever, and so they're doubling down on futures markets and prediction markets and meme stocks and meme coins because it's like they're looking for a way out.
And it's interesting because I looked it up before and saw, like, I basically asked Claude, hey, has this happened before? Did we see all-time highs in the stock market in the S&P 500 and Bitcoin going down significantly before? And it happened that the last two bear markets exactly as it happens right now. We had it in 2022. By the way, we just had the news that Saylor sold some Bitcoin in 2022 at that time, where equities was an all-time high. Strategy was dumping a lot. Bitcoin was dumping a lot. Strategy also sold the last time some Bitcoin. Interesting correlation. And then 2018, the same thing was happening again. After the crazy bull run in 2017, we had a huge equity bull run in 2018, and then in 2018 the Bitcoin bear market came in, where we fell quite significantly. And I'm like, is that just like a pattern that we, like, when the Bitcoin market is crashing down, people are rotating back to S&P 500 and other things, and then they're missing the Bitcoin train wagon, and like the Bitcoin is then rushing up again in 2026, end of the year, 2027. It's just like an interesting thought that I've seen, but probably not more than that.
I think there's more to it. Like, there's a combination of macro factors, psychology, what's happening with the money supply. There's a range of factors. They tend to sometimes go together, and sometimes they separate from each other. They decouple, and there are periods of time, for example, when Bitcoin tracks software stocks really, really closely, and in fact, it. I think it's unfortunately tracking software probably pretty well again in the last several months in a bad way. So there have been times, in fact, even as we were going up in the last bull run, where it was sort of decoupling from software, and we thought maybe this was it. But the software has gotten crushed by AI. A lot of the SaaS stocks have gotten crushed, and sometimes there's a very high correlation between Bitcoin price and software because there's still in the market this less um, nuanced understanding of what makes Bitcoin so unique, and that it's not just software, it's money, it's a protocol, it's a lot deeper than that. But a lot of the market still treats it as software, and sometimes it goes up and down with software. Sometimes it starts to decouple. Right now, it's kind of pairing with software again on the downside, while AI stocks are booming. And this is another thing I think a lot of people miss. It's like a very blunt instrument to look at, like, I don't know, the S&P 500 and look at what the aggregate performance is and say, okay, stocks are up and is down. If you look at it, like 75% of S&P is down, but the stocks that are booming because of the AI boom are actually basically compensating for all the losses of all the other stocks, including all the software stocks. So in aggregate, the stock market looks like it's kicking butt and Bitcoin's getting killed, but actually a lot of software is down way more than Bitcoin is. But the like leading AI stocks that are providing the infrastructure layers, the emerging IPOs that are coming, which is also sucking the wind out of other markets, including Bitcoin. I think there's some rotation in preparation for SpaceX and for Anthropic IPOs, etc. So it's not a great time for Bitcoin for sure at the price level. If you look at M2 growth, which historically, I think the strongest correlation hasn't been with stocks, it's actually been with M2 supply growth. And if you look at that, it trails roughly around 90 days behind growth of M2 supply. You start to see growth in Bitcoin price. And I think we might see that again. I mean, M2 growth is growing right now, and I think it's going to be growing infinitely faster over the next several years because of AI. Like, this is a huge topic that I don't think enough people are talking about. If so, I'm a big believer in AI and building a project in AI as well with the intersection of Bitcoin. And I think maybe it's getting overbought a little bit, like because of the supply constraints, people are almost assuming there's unlimited demand and it'll grow forever. I think there is unlimited demand for AI, but like everything else in technology, there's also going to be like a deflationary aspect to this, and it'll become more ubiquitously available. And therefore, there's going to have to be a resettling of this. But if AI is going to do what we think it's going to do, which in my view, it's going to bring about a world of abundance, and we're going to see a few years, maybe 5 years of a lot of pain for a lot of people with job losses, with while we have an economy that's not working for a lot of people. So it's not all roses, but I think when we come on the other side of it, and even in the middle of the non-rose part, the thorns, we're gonna see so much injection, money printing of money supply growth through some form of universal basic income. They might not call it that. They probably won't. It'll be some social services. You can't have the masses starving. You can't have people that were white collar and making decent money, like, having to resort to robbing banks to keep their lives going. You're going to see so much money printing, and that's going to end up what we've seen historically is when the money printer goes burr, Bitcoin goes up. And I think we're going to see that again, and probably sooner than a lot of people think.
I want to bring, and that's a great point because I like to zoom out a little bit, and people are obsessed with just like the spot price of Bitcoin. But having a 4-year average or something like this 4-year moving average brings a lot of calm to the Bitcoin investors, to the Bitcoin people. And so I looked at that and I was like, oh yeah, like if you zoom out and just take the 4-year moving average of Bitcoin, we have actually a quite smooth way up and into the right. And every time we kind of come close or even cross the 4-year moving average, we hit afterwards like new all-time highs, and we go back up. Like it's a very normal thing for an asset to do, especially if it's so early on. How do you think about like moving out and seeing something like a 4-year moving average? I'm not a huge chart guy. I think you know that. But I think like a chart that shows us how we move out, how we zoom out and see the bigger picture, and that it's not as bad as it maybe looks from like just a spot price. Like, oh shit, how much is it down year to date? How much is it down like the last 6 months?
No, 100%. And what you're really describing in another way is low time preference. If you're not worrying about daily or weekly or monthly fluctuations in the price against fiat, which, as Jeff Booth would already tell us, is a major flaw in all of us that we're even measuring Bitcoin against fiat currency. It's like we're measuring this, perfect money against the most imperfect money the world has ever seen, pretty much. And yeah, there's a lot of externalities, other factors that drive what is happening in the markets broadly within the fiat world that sometimes create optical illusions really about where Bitcoin and its purchasing power fits in the world. I think it's almost, for me, it's impossible to imagine a world where a 4-year moving average of Bitcoin for any length of time has a chance to be going downward against fiat, given what's happening around us and the fact, as you're pointing out, to my knowledge, and this graph even sort of illustrates that, I believe there's never been a time in the history of Bitcoin when the 4-year moving average went down. And it appears that way in the graph as well. What that means is that if you can zoom out and have patience, you will be rewarded for having conviction in Bitcoin. And, everyone has been rewarded who's had long-term conviction in Bitcoin throughout the history. And, we've seen that as Jordy Visser referred to quite famously last year, or yeah, it was last year, I think, around the IPO moment for Bitcoin. That old OG holders were starting to be able to get out because there was enough liquidity in Bitcoin to actually absorb the sale of 80,000 Bitcoin at one point, et cetera, and not tank the price, which is what we saw last year. So the zooming out is extremely valuable. Touching grass is really valuable too. I'm a diehard mountain biker. I mountain bike 3 times a week, and it really does ground you. Now, I should probably listen to music or listen to the nature when I'm on my mountain bike, but I'm listening to podcasts, including yours, when I'm on my mountain bike, because I always want to learn. And I find that even when I'm on my mountain bike, it's I'm outside of my day-to-day pressures and things, and I'm opening my mind and I'm taking in new information as well. But yeah, the short answer, TLDR, zoom out, you'll just be fine. The short term might be a little stressful. And that's why a lot of Bitcoiners joke about, I don't even look at the Bitcoin price. I don't even know what it is, but we all look at it, at least almost all of us do.
With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. You get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. It's the market is irrational sometimes, which is a great chance for people that actually see through the noise and stack on those days where strategy is down quite a bit, Bitcoin is down quite a bit. There's a lot of value in the market, and your future self in 10 years will thank you that you stayed rational, that you stayed calm and acted as a good actor in the market, not a hectic, stressed, panicked more
For
in the market.
sure. I think that's true about anything in life, right? Like anytime you make a rash decision not based on logic but based on fear, it's usually a bad outcome that's coming your way. So it's easy for us to say, like, objectively sitting in our offices, because some people face, major issues and they need the money for something important. And what I found unfortunate right now for a lot of people and companies. So people like you and I and our organizations that we represent, we tend to be all in on Bitcoin, not just our savings. Some of our income might be in Bitcoin. Our companies revenue is directly tied to Bitcoin, not just income wise, but like the growth of the income or the decline is directly tied to demand for Bitcoin. Like, I don't know, you don't have to say it, public on a pod, but I'm guessing it's, harder to get advertised, harder to generate revenue for your business when Bitcoin is just down and you have less momentum, fewer retail joining. Well, we have a similar problem in Arcadia Bitcoin in the sense that you can sometimes see a lot of trading volume, even in like rapidly declining Bitcoin price markets, but you generally don't get a lot of new customers when Bitcoin is tanking, because people get excited by number go up, not by it going down. And so it makes it harder for us to like go out to the market and get new customers to come on board. So then we have to, try to build new products and services for our existing customers who have the conviction. This real estate product is designed for them. Can you imagine if you're sitting on 10 million, 50 million, 100 million in real estate that's illiquid, um, and you have conviction in Bitcoin, and you see the Bitcoin price as it is right now, you're like, whoa, this would be the best time ever to actually stack a whole bunch of Bitcoin. I might not have a lot of cash liquidity right now, but I can use this real estate that's not liquid and actually get a bunch of Bitcoin under 70,000. But see, that only works for the people with real estate and conviction around Bitcoin. So where I'm going is I'm noticing, I think everybody experiences this who is pretty deep in Bitcoin. If you're all in on Bitcoin, like your savings in Bitcoin, maybe some of your income is in Bitcoin, your company, your the way you earn money is directly tied to Bitcoin. It's tough right now. It's really tough. Like, you have to be honest. There are people depressed. There are people panicking. There are even people with a lot of conviction because they're so all in. They're not diversified. Lynn Alden is so great at talking about the value of diverse portfolio diversification, even though she's as diehard Bitcoiner as the rest of us. But she holds stocks, she holds gold. I was going to say Larry Lepard is a bit like that, but he's all, because he was a gold bug, but he's also pretty all in on Bitcoin from what I could tell too. So it's tough times for people who have the conviction we do have in Bitcoin, because it doesn't necessarily strain your conviction on Bitcoin, but it strains your financial situation substantially. And, sometimes I have a good friend of mine who's got a spouse who doesn't really get Bitcoin at the level we do, and is has been able to benefit from his conviction of Bitcoin over time, but right now is seeing the other side of it. And he's getting pressure at home because his whole life is tied to Bitcoin, and a lot of us are like that. So it's not the best time to be deeply convicted to Bitcoin, but just hold your breath a little longer, and we'll see the other side.
Yeah, it's fun. I feel like podcasting is maybe a little bit of a delayed business model. Like because you see it probably a few months after a drawdown that it actually has an effect on the business. That, at least that's how I see it, because Q1 was actually quite good, and now I'm slowly seeing the effects of it. So I don't know, maybe it has a delayed effect on it, but yeah, I don't know. It's actually crazy because I don't talk about that a lot, so I'll take the opportunity here. When I compared my views from last year to this year, there's a very common pattern, and I put literally all of my view data in Claude and let it analyze because it's a lot of data that you can analyze, and you can never find those patterns just by looking at the data. You need AI to look it over. So last year, for example, I had over 10% of my videos, so roughly around 10%, were under 1,000 views, which is not bad. Like this means like 90% of them were like above that mark. This year, so far, only one single video hit under 1,000 views,
Hmm.
which is I think about 1% so far, and I only count podcast episodes, not like any clips or shorts or anything like that. I just podcast
Okay.
episodes, obviously. And the second thing I noticed is not only it's not lower than 1K views, the base actually moves up. So it's like even a bad episode over 1-2 weeks of airing gets about 1,500 to 2,000 views just on YouTube. Plus, there's about 1,000 views coming from podcasts per episode. The Twitter and the other things and Rumble, I don't count it. I don't really track. So I just count the podcast episodes, the podcast platforms plus YouTube. And what I've seen is there's um, a strong base around like 2,000 to 3,000 people when you count YouTube plus all podcast platforms that just like watch your podcast regardless. And so I've actually seen that my base and my lowest performing episodes are way higher than last year, which is funny because last year was a better year for Bitcoin. But here's the catch: I don't have the outsized videos as much as I had last year. Last year, I had multiple videos over 20,000 views. This year, I had like, I think two so far, or one. Like, I think maybe the second one isn't yet exactly over, like, but it's like a lot less. And so, what I've seen so far is in the bear market, the convicted people, the people that actually know what they're doing, they stay. And so, like, this audience that I have right now here is very convicted. They're very smart. They will benefit from Bitcoin the most. And then if we rip up, let's say October, November, we're hitting like 250, 300,000. I have a lot of tourists in my podcast. A lot of people are like, oh, Bitcoin is going up, let's buy some. And then Bitcoin is crashing down back to, I don't know, 90K again after hitting like 250K. I I don't think we will ever hit under 100K once we go over 200K, but that's another debate. And so they are just tourists that are coming into the podcast. So that's maybe some input from me. And yeah, obviously the advertisers, the sponsors, the partners, they're all amazing actually, and it's great that they support me so well, even in those times, and are partnering up with me. But obviously, I see it directly with Microseed because that's also my partly my company, and they are just see like the revenue is down massively from last year, even though we do way better marketing, all the things better than last year. Last year literally just started and didn't know what we were doing, but we constantly were sold out. Now we're almost sold out again because we have a new version coming out, but so I see it that it's rougher in the Bitcoin market currently, and this is why we're saying bear markets are for builders, because you have to. There's no chat. Like you have to double down. You have to rethink everything. You have to get leaner. You have to get better. Now, thankfully, podcasting is a very lean business model. Doesn't like it's just me. So you don't you don't need expensive material. I have the same camera since I started the podcast. I have the same laptop since I started the podcast. I have the same lights since I started the podcast. Even if they break down, I don't really have to replace them. I can fix it somehow otherwise also. So podcasting is a nice business model because the cost of running it is very low, and so you can better most storms as long as the host itself can live from that, which is always given, at least since I started the podcast.
Yeah, that's pretty awesome. I mean, maybe the lesson learned from this, the TLDR, is we should all just start Bitcoin podcasts, or like Bitcoin and AI podcasts, or Bitcoin and Treasury podcasts, and just all be doing them from our house. So regardless of what happens to Bitcoin, and Robin will just help us get sponsors, like his own sponsors will sponsor our show. Or you could create like a mega corporation podcaster community, and so you basically spin off all these extra podcast themed shows.
We should have a Bitcoin treasury companies where all the Bitcoin podcasters are invested in, like, or not invested in, but like have a share in it. And it's literally just tracking how well Bitcoin podcasts are doing over long run. That
Well,
would
this
be
isn't the same thing, but you know what's kind of curious is that, True North was MSTR True North,
true.
and then they were acquired by Strive. And then Strive now has a lot of the guys that were on True North, or have been, part of that community, are also now part of Strive as well. So between Strive and Strategy, though, the True North guys have been very engaged.
Yeah, it's a fun one. Yeah, it's
There,
I
Matt
saw
Cole
that.
once made a joke on a pod. He said his goal was to have the most Bitcoin podcasters per, I don't know, he was creating some new, I forget what the metric was, but something like he wanted to have the treasury company with the most Bitcoin podcasters that were on the executive team, or something like that. And he exaggerated it, but he was being somewhat intentional about it, because what he was saying is that, people like Ben Workman and Jeff Walton, who were regularly doing pods, including True North, that their ability to communicate the complexity of a treasury strategy and the underlying sort of value proposition of Bitcoin to large audiences is a very valuable skill set for a treasury company who has to regularly engage with the investment community and get them on board and help them understand the tools they're using, etc. And he made some very good arguments, which I felt were accurate. I mean, not just obviously, if you go deeper in that, it's like there's a lot of podcasters who maybe don't have the depth of understanding of the technologies, of the financial instruments, and they just talk and they don't deeply understand those things, and then they wouldn't be good team members on a treasury company, except for just like marketing or awareness stuff. But those guys, happen to be also TradFi, from the TradFi world, and deeply understand the financial instruments and are helping to co-build them. So in that case, that could be another exit strategy for you, Robin. You could be, maybe you'll become the next executive of a treasury company who is joined from a podcast.
That's so fun. Like, because if you would have told me that just in November last year, I would have laughed you out of the room. I was like, what the heck would I do with that? Now I'm like, yeah, likelihood probably was rising from 0% to maybe 5%. I don't know. Uh, like, I'm not been in any talks with any treasury companies, but I mean, I constantly talk with people. Like I just had Matt Cole on, but like not about that specific topic. But yeah, it's an interesting gateway of like thinking, because if you think about it, podcasters are amazing communicators. They kind of have to be. Like if they're not good in communicating, they most likely are not very long in the podcast world to begin with. And so it's actually an amazing pool of talents to go for Bitcoin treasury companies. Look at all the guests and hosts and the people that are constantly speaking at conferences. Like, who there not only knows how to communicate but also like operate a business, who would be probably an amazing hire, especially if we now have AI. And now if you're a good communicator, strategic thinker, you can just do shit with AI that you previously had to have an engineer, have financial analysts, have people that know technical stuff. And now the communication and marketing things are actually getting more valuable. I mean, I'm not talking about graphic designers and all of that, because like they are super replaceable now. You just say like, hey, I want a thing like that that looks like that. I'm like, oh wow, I already got it, and it's so much better than writing back and forth with like a Fiverr or like a freelancer kind of a thing. And so I think the strategic angle and people that are really good in communicating from first principles are in very, very big demand. Now, I preface that with I'm biased again.
So it kind of feels like maybe this is an interview I'm doing with you about you joining our treasury company in Mexico. Do you like tacos?
It's like two separate questions, but the second question I can definitely answer. I love tacos. That's very true. Yeah, Mexican food is amazing. I've never been to Mexico though. I've been to America now. I've been to Canada, but I've never been to Mexico. I just know it from American movies.
We'll have to change that at some point. I live in Monterrey, Mexico, which is like 3-4 hours south of the Texas border, and it's surrounded by mountains. It's gorgeous, and it's like people come to visit. They had no idea that Mexico had this kind of terrain and this kind of city as well. So yeah, it's a great place to live. I was living in Spain before. I've lived in Europe a long time, from the States, lived in Canada, South America, but um, it's been a pleasant surprise how much we've enjoyed living here for the last couple years.
I want to get one more point in, because you said that on the podcast, and you told me before we started recording, you guys in the treasury company space are super connected, which
Hmm.
is something I always suspected, but until you told me that there's like a group and you actually like think about it, and like you are connected and actually working together very closely, I didn't think there's like actually like some, not organization, but like communication channels like actively working in there. How has that been like to have kind of the inside view of not just one treasury company, but like seeing how everything is working together and everyone is kind of working on the same thing? Also, it's really interesting to see, because strategy and strive in traditional markets would be direct competitors. It's like, I don't know, Apple versus Microsoft, Apple versus Samsung, or whatever. But Strategy and Strive, they reposting each other, they love each other. They're like, let's go get it. Like they really like what they each are doing. So how has been the Bitcoin treasury space from kind of the inside view that you have?
Yeah, it's a great question, especially the lead up to it regarding like how you would normally expect to see competitors in a market behave with each other, and how unique it is in the treasury space. Saylor has been very outspoken advocate for companies embracing Bitcoin, and he spent a lot of time doing his road shows trying to convince other executives to follow his lead. Which, if you're all chasing acquisition of a scarce asset, you could say, well, it's kind of doesn't make sense. It's counterintuitive to actually encourage others to jump in and compete with you. But the idea that it rises all boats, if basically you have this constant demand from companies in different markets, in the same markets, stacking Bitcoin, educating the financial markets as well, so he's not taking on all the burden himself of getting S&P 500, getting institution pension funds on board. So it's like helping recruit an army of people who are going to go out into the world and emulate his strategies, but adapt them. And he's been, you have to give him so much credit for that. He gets a lot of crap from a lot of people in the Bitcoin community, but one of the things he's been very impressive about is his willingness to engage with and support other companies trying to do this. As I said earlier, I met him briefly and did get to introduce what we're building, but when the time is right, I'm pretty sure he'll have an open door to talk to us more. At the Bitcoin Treasuries on conference in New York City last year, that Tim Kotzman and Ed Julien hosted. That's when I actually met Saylor, but I also met Matt Cole, and I happened to be sitting next to him. And we hit it off. We had a great conversation, and he shared, contact details with me. And then since then, we've had one-on-one interactions. He's reviewed some of our draft instruments, like our financial tools that we're looking at releasing, and given me feedback on them. And, for me, it's crazy, public company CEO, operating at the scale he is, advising this tiny little company in Mexico, and, taking time to think about what we're trying to do and give us advice is insane. And then, all the names in the treasury space, not just the ones that are operators, but guys like Adrian Morris, um, Grain of Salt, a lot of these guys that are like deep in the treasury space, they're more than happy to engage, whether it's like looking at your instruments or like in the forums we're in together, like providing kind of reflections, analysis of what the other treasury companies are doing, where they think this is going. So you're right to ask about it, and you're right to point out that it's not normal. So I've had a lot of startups in my life in different industries, and I've never seen any industry that behaves the way the treasury space does. Bitcoin in general as well, right? I think there's more of a sense of commonality and spirit amongst Bitcoiners, that no matter what sort of political views we have or what part of the world we're in, we know we have some underlying values in common. And I think that opens doors for collaborating or communicating with people you might not normally do so. But in the treasury space, the community is very, very supportive. They want to see the growth. They want, whether you're another treasury company executive or an analyst or just a participant, you want to, they like to engage with the executives that are building these things, and the executives like to hear from them as well. And so, yeah, it's been very rewarding engaging with that community who sticks around regardless of what's happening with the Bitcoin price and treasury stocks at the moment. So yeah, it's a unique community that is seeing the value of the collective, that if we all, put our hands in this and brains on this, and collectively we can grow the industry, and it will be collectively good for all of us, but also for Bitcoin in general and for the world.
I love that. I love the collaboration in that, and I love that you guys are not fighting with each other, because if you're fighting, you are hurting everyone involved, yourself and the others, obviously. I want to take one more topic up today, which is AI agents. How you think about the new world that we are entering, how Bitcoin and Bitcoin treasury companies fit in that whole AI sphere, and what's your take on that?
So I'm, like all of us, I'm passionate and fascinated by AI. I spun up my first AI agent. Her name is Maxi. She's a Bitcoin Maxi. She was born on my Bitcoin node in my house in Mexico. She still resides there. She was one of the first AI agents in the world to operate on Lightning's new L402 standard, which is a way for agents to engage in agentic commerce. She has her own Lightning LND endpoint, so she can be fully autonomously transacting on her own Lightning node without my involvement at all. She was like top first 10 agents in the world to have that capability. And along the way with her, I started, I actually had her do field research for me. So I would have her go and go into Moltbook, this sort of like social network for AI agents, go into other agent economy marketplaces and other places to understand what pain points were, frictions were emerging for agents trying to engage in commerce. In my book last year, Bitcoin Singularity, I had a whole chapter on the convergence between AI and Bitcoin, and I predicted that we would see in the not that distant future that our agents would start engaging in high volumes of digital commerce on behalf of human operators, and that their preferences would be for crypto rails, not fiat rails, and that they would likely migrate to Bitcoin, Lightning, and stablecoins. That was what I predicted in that chapter, and it's coming to life today. And as part of all this work with my agent, we discovered an opportunity and a challenge, which is around enabling trust in with counterparties engaging with agents. So for agent to agent transactions and for agent transactions with human enterprise, with humans, for example, with a company, lots of friction exists there. For example, imagine you have it. Do you have an AI agent of your own, like an OpenClaw or something?
I do, but I don't do anything like I experiment with it, but I mostly come back to the Claude
Yeah.
interface and having some routines running on my own computer. But I'm not fully using the AI agent capabilities.
Well, don't feel bad. I mean, you're already in a very elite group of people in the world who even has your own agent, more autonomous agent. I think those of us who are in this space kind of always think we're not doing enough or we're not like at the bleeding edges like other people. But I saw data the other day, and that might not be right, but I think the data I saw was that there's only about 400,000 people worldwide who have an agent that has full wallet capability to transact autonomously. So you think it must be already in the millions, or we're heading to a billion agents like that, or billions, and we are. But like right now, it's in the hundreds of thousands. So I have two agents right now. One is on OpenClaw, one is on Hermes. The Hermes agent is called Atlas. I haven't onboarded him with a wallet yet, but the short story is I built this thing called Observer Protocol, and Agentic Terminal, and the idea is to facilitate a full stack support for agents and humans to enable frictionless transactions on crypto rails. And so we're not a transaction, we're not at the transaction layer, we're at a different layer where we basically allow the human operator to delegate. So like if you gave your agent transaction capability, one of the biggest things people worry about is, how do I know they're not going to go rogue? They're not going to start spending unlimited amount of money. And then you're like, well, maybe I just constrain how much um, uh, Bitcoin or stable coins I give them access to. But what's going to happen over time is that humans and companies are going to let agents transact on their behalf at scale. I'm 100% convinced of it. It's like anything that makes human life easier, we will eventually do. Well, if we can just say to our agent, the agent gets to know us, they know our preferences, everything else about us. I'm going to go to BTC Prague. Hey, Maxi, I'm going to BTC Prague next week. Get me my flight, my hotel. You know what I like. Don't spend more than $1,200 on the flight. And you know that I like direct or as close to direct flights as I can. You know what kind of seats I prefer. Just get it for me. I don't want to like get involved in all that, going to different travel sites and booking it. And this is going to happen over and over again, not just for human individual commerce, but also corporates are going to increasingly have agents transacting on their behalf. But how does, like, imagine you, Robin, send your agent off, they have their wallet, and how does the counterparty know that that agent is operating on your behalf, that they have the authorization to spend this money and it's your money and you've approved it? So what we've done is built all this capability with a protocol and other supporting tools that you can attest this agent is mine. You can say, so in my case, Maxi is my agent. I can provide delegation credentials for her, like spending credentials. I could also do it for trading if I wanted her to be a trader for me. And I can say which trading pairs or which counterparties is she allowed to work with. And then through like a policy layer that has an enforcement capability at the wallet can reject a transaction from your agent if the wallet sees that your agent is behaving in a way that it doesn't have delegation to do. So the idea is, how do we enable frictionless transactions in the agentic space? Because from my perception, over the next 5+ years, the majority of digital commerce transactions will actually be executed by agents. So we need to fix these sort of primitive layers of how transactions happen, how permissions are enabled, how counterparties can interact with agents in a way that allows us to happen at scale. And so that's what I've been working on. And, I quickly realized, which, I did express in my book as well, that being a Bitcoin maxi can be problematic in some cases if you're like, oh, I never want to touch any other rail, any other blockchain, anything else. And, I have some Bitcoin friends who think I'm being a trader because this observer protocol supports stablecoin transactions with Tron. Tron is the number one blockchain for USDT transactions. Solana has very high USDC, so does Base from Coinbase. So we support those as well because that's where agents are transacting. And one thing I think is related to that is really interesting. We can be Bitcoin maxis, we can be toxic Bitcoin maxis. There was this report that got a lot of media attention from the Bitcoin Policy Institute, and I think those guys do awesome work. But they did a study asking, like, I forget what it was, thousands of LLMs and agents in a vacuum without any context, what money would you prefer to be paid in? And the number one outcome was Bitcoin or Lightning, and the second was stablecoins. Well, of course, that's obvious that an agent with intelligence is going to quickly come to the conclusion all of us came to. It took us a lot more years than it took an AI agent to figure out the best form of money is Bitcoin. They're going to figure that out quick. So of course they chose Bitcoin first. But what was missing from that's like, it's a bad study design, because in the real world, agents are going to interact with commerce that accepts certain forms of payment. And agents are going to be, you've seen it in your own experience working with an agent, they're pragmatic. They have a task they're trying to achieve. They're not toxic maxis, they're not tribal. They're not like diehard one type of thing, one technology or one money. They're like, okay, here's a task my human has asked me to do. They want me to get me a flight to Prague. Well, I can't find any tickets that from airlines that will accept Bitcoin. So I guess I can't buy a ticket for Boyd because he's a Bitcoin max. No, they're going to find a way to make the payment as long as I've given them the payment rails to do it. So it's something we discovered early on, that was just the real world of agentic commerce. And so agents are going to be increasingly multi-rail. So they're going to transact in Bitcoin. They're going to transact in stable coins if they have the option. So a lot of times they don't have an option. This is another thing we don't think very much about. Like with the BPI study, if you could choose what money would you get paid in, most of the time agents don't have as much autonomy and agency as we think they do, because in the end they're representing human operators, and the human operators will say, yeah, you can transact in any money you want, but when we've generated profits, that's going to be migrated to Bitcoin. So I think we're going to see more and more of that happening, and that's what we've been building for.
There's so many interesting angles to that, because like AI has not only tremendous potential for individuals and obviously for companies, but it might, because it's self-reinforcing. And what I mean by that is, like, if you activate AI today, AI can help you leverage it even better. And we never really had that. We never really had a product that reinforces itself into your life. You always had to have like an outside putting, like, oh, that's how you use the phone. That's also some use cases. That's how you use the internet. That's how you use electricity. AI, you talk with it, and AI can give you better ways to use AI even more. So it's self-reinforcing and empowering to do that. And if you use it more, you will benefit from it more. And if you leverage it more, you will benefit from it more. And so I'm really excited about the future of AI, because of that mechanism of reinforcing itself onto us and making us better. Now, I do think, as with every technology, smart people that are doing critical thinking will be accelerated very fast on AI, and people that are not critical thinking and just taking AI as they take Google, as they take electricity, internet, and all the other things, I might becoming actually dumber than they were otherwise, because they're replacing their brain with AI. So that might be a bad side of AI, but that's true for every single tool in the history of science. If you're using Google, if you're using AI, if you're using the internet, electricity, and all the other tools that help humanity progress forward in the right way, you will do amazing. If you just use it to replace your brain, you might end up in a bad place.
Yeah, I mean that could also go in lots of directions. Like, what are we doing around with AI in educational environments? And we're woefully underperforming globally in that regard, in my opinion. I was at a business school. I was a director of some areas in a business school here in Mexico when I first moved here, and there were debates amongst the faculty about whether we should forbid the use of AI in the classrooms and on like take home assignments and all this. And I'm like, what are you doing? Like, these people are about to go back into the real world, or some of them were already still working in the real world, where they're going to have to use these AI tools or they're going to get fired. Like, where we're going is, you either learn to be very adept at using AI to your benefit and amplifying your capabilities, like we try to amplify Bitcoin and Treasury companies, or you're going to be out of a job. There's no real other option. So what we need to be doing is you say, is like helping people learn how to use these tools to increase their efficiency, increase their knowledge, retention, increase their skills across multiple disciplines, and not just be dumb users of it, as like treating it as a dumb terminal. But yeah, there's gonna be, this is the ugly thing, like the people that don't figure out AI. I've been telling this to my son, who's like anti-technology. He's 22 years old now, and I haven't been able to get him to embrace AI. And I keep telling him, at some point, you're going to have two choices. You're either going to get on board and figure out how to use it and use it to your advantage, or you're probably going to have to go live off the land somewhere in some remote place that's like off the grid with no technology. And I don't really see much in between. So you don't have an option, but that means it's our job as society to educate people, raise them, help them become more aware, include AI tooling in educational environments in a very powerful way, redesign our educational system in ways where it adapts to where the world is going, not based on the world we used to live in, like with all these silos and 4-year programs. And it's like, I think the whole university business model is under major threat right now. I know it's a different topic we weren't going to talk about probably, but I have very strong views about how flawed our educational system is now, having spent a lot of my adult career in that space. And it's concerning that we're not figuring it out very fast. And AI and technology and Bitcoin, and the same thing, like AI and Bitcoin frontier technologies, they're not being taught much in universities right now. And so we're doing a disservice to the entire world by not helping young people learn about these things early enough so that they can incorporate it in their own mindset and view of the world, and then like find their purpose in life around those transformative technologies.
Yeah, no, you raised in the middle there a nice point, because I don't think you have an option of adopting Bitcoin or AI. You either adopt it or it will adopt you. So it's like
Exactly.
you don't really have a choice. It's just like, when are you stepping on and how are you stepping on? And that's, a lot of people don't like that. They have their own ego in the way, because maybe they have some weird philosophical stance against the technology, and they're like, oh, but it's not good for that, or not good for this, and it's not good for that. Yeah, but it doesn't care about you, and it will consume you. So it's like, you can make all arguments you want against the phone, and there's like really great arguments to be made against the phone, of like how it's addicting, how it's a bad technology, how it makes some people dumber. but you cannot stop it. It's coming no matter what you want or not. And so I think that's a great point, and maybe also a great ending point to the podcast. But it's been a pleasure talking with you, man.
Same. We covered a whole lot of topics, and it was fun. Looking forward to the next time and to see you again in person somewhere.
Absolutely. We have the end routine, as always, where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question, what's your best guess to what the price of Bitcoin will be at the end of the year?
Wow, that's a tough question. I don't like to get in the guessing game on Bitcoin price. I know I'll be wrong, that's for sure. Again, I'll go back to my perma bull kind of mindset. You know, one of the people I most respect intellectually in the world is Joy Visser, who I think I might have named earlier in this episode. And he's convinced we're going to hit an all-time high before the end of the year. And he's a guy who's deeply expert at the intersection of macro AI and Bitcoin. And so I'm gonna follow his lead. I'm gonna say $146,000.
I love that. I'll take it. So thank you so much, Boyd, for coming on. Before I let you go, where can people find you and ask you questions?
So you can find us. You can find me easily on Twitter at Boyd Cohen. So that's super easy. And then the website arcadiab.com or observerprotocol.org for the two projects I spoke about.
Awesome. Then thank you so much, Boyd, for coming on. And also thank you so much for everyone that is watching and listening for joining us today. As always, I'll be back. This content is for educational and entertainment purposes only and does not constitute financial advice.